Russia's sanctions-hit militarized economy is expected to slow next year. Banks' profits will fall while the benchmark interest rate may climb to 23% by the end of this year. Those expectations from Andrei Kostin, CEO of Russia's second-largest lender, VTB. Kostin predicted that GDP growth will slow to 1.9% in 2025. That's above the International Monetary Fund's forecast of 1.3%. It comes just days after the Russian ruble hit its lowest level since March 2022, following the latest round of US sanctions on Russia's financial sector. Last week, Russian President Vladimir Putin said there was no need to panic about the fall of the ruble in recent weeks. He argued the sharp fluctuations were related to budget payments and seasonal shifts. But analysts and economists attribute the volatility in part to rising geopolitical tensions, since Western nations allowed Ukraine to fire their long-range missiles deeper into Russian territory. They also believe US sanctions on Gazprom Bank last week could have been a factor. Russia is grappling with high inflation, and the central bank has already hiked its key rate to 21%. It's at its highest level in over 20 years, and has drawn criticism from businesses struggling with high borrowing costs. In an interview with Reuters, Kostin cautiously criticized the central bank's hawkish monetary stance. He added that Western sanctions, high spending on the military, and elevated high inflationary expectations made the benchmark interest rate less effective.
Retailers in the U.S. are pulling out all the stops this Cyber Monday, enticing consumers with steep promotions and discounts on what traditionally is America's biggest internet shopping day. After lackluster spending on Black Friday, retailers are using push notifications, emails, and even artificial intelligence to draw shoppers. Online retailers like Walmart and Amazon are relying on generative AI customer service and search features to make it easier for shoppers to find products on websites and mobile apps.
We use AI in many different ways across Amazon.
Amazon Vice President of Global Workforce Health and Safety, Sarah Rhodes.
One thing that our customers will see this year is an AI-powered tool called Rufus that you can see on our store. It's actually in the upper left corner of our store. So if a customer has a question about a product, maybe a sizing question, or maybe they're just looking for general gift ideas, they can use that AI-powered tool Rufus to help them out.
On Saturday, retailers using AI tools for customer service saw a 15% higher purchase rate by users, according to estimates by Salesforce. Online spending on Monday in the U.S. is expected to reach $13.2 billion, according to preliminary estimates from Adobe. That's 6% more than on Cyber Monday a year earlier. Meanwhile, sales at brick-and-mortar stores on Friday grew just 0.7% year over year, according to preliminary estimates by payments processor MasterCard. With many Americans recently carrying more debt, many are using third-party buy now, pay later services, with spending on the services likely to approach $1 billion, based on Adobe projections.
The S&P 500 and Nasdaq kicked off December with fresh record closing highs on Monday, boosted by technology-related shares. The Dow dipped 0.3%, while the S&P added 0.25% and the Nasdaq gained about 1%. Stocks are coming off their biggest monthly percentage gains in a year, with President-elect Donald Trump's potential plans for deregulation and tax cuts seen as lifting the market even higher. J.D. Hatfield is CEO and CIO of Infrastructure Capital Advisors.
We have a 7,000 target on the S&P, assuming the corporate tax rate goes to 18%. And most investors don't appreciate the direct impact on earnings and the growth rate of both earnings and the economy. So that's the real upside, and that's why we think the market will continue to grind higher, particularly next year as we get more visibility on how big that corporate tax reduction is going to be.
Stocks on the move Monday included Super Microcomputer, which surged more than 28%. The artificial intelligence server maker began its search for a new finance chief based on recommendations from a special committee reviewing the company's accounting practices. Shares of Intel seesawed until ultimately closing lower after CEO Pat Gelsinger was forced out amid the company's costly turnaround plans. Tesla shares rose about 3.5%, with Stifel raising its price target on the stock. Data on Monday from the Institute for Supply Management showed U.S. manufacturing activity improved in November, while the final reading of the S&P Manufacturing Survey was revised upwards. Investors now turn their focus to Friday's non-farm payrolls report for the latest clues on the Federal Reserve's next policy moves.